What would you say explains, first of all, just the move that we've seen over the last couple of sessions?
Sure, Kelly, good to be here. I think if you look back, September was a terrible month. It was for the market, but energy was even worse. So we've got a nice little recovery coming off a pretty terrible September. Move in crude from the high 30s to the low 40s also helps. And then you've got this thematic trade that's going on around cyclicals and low interest rates forever. So I think you put all those three things together, and energy's having a nice October so far.
We were talking, Dan, about why energy was sitting out of the rebound trade for a while. It just seemed like, well, it has its own problems, it has supply issues, and you name it. If you're somebody watching this who thinks, you know, I'm going to bet on the recovery, I'm going to bet on the rotation, should you pick up these energy names or not?
I think the answer is yes, if you've got a reasonable time frame. I mean, trading-wise, they've been all over the place. Crude's not going to make a massive move to the upside anytime soon. Feels like it's a bit trapped in this sort of high 30s, low 40s area. But I mean, the reality is that energy stocks could double and still only be flat for the year. They've been so tough that there's real value there. So the answer is yes, if you can take this volatility and have got a reasonable time period.
Yeah, Exxon, which I think is one of the names you would recommend, is down 50% this year. It has a 10% dividend yield. I think Chevron's up around 7%. Are those dividends safe, or are they simply just not that attractive because investors are so concerned about the capital losses?
I think people are worried about the energy transition. They're worried about oil prices, and you know, energy has not been a good place to be, so you just sell the biggest names. I don't know if Exxon's dividend is safe, but if they cut it in half, I bet the stock goes up, right? The market would like to see sustainable numbers from these companies, and so you know, my guess is Exxon's going to protect the dividend. That's going to pay you while you wait. It actually makes the stock, you know, they're going to borrow to pay that dividend. It makes it one of the juiciest, sort of highest leverage names to prices recovering, because if price gets better, you know, that dividend gets safer. So I think they're reasonably safe. And even if they cut them, I think the stocks are still interesting.
Shepard Smith here. Thanks for watching CNBC on YouTube.